November 9th could be the day you see an extra $2,000 deposited straight into your bank account, but only if you meet a few little-known requirements. Across the country, millions of retirees are wondering the same thing. Is this payment real? And if it is, will I actually qualify to get it? The confusion is real, and it's costing people who qualify thousands of dollars simply because they don't understand how the system works or what steps they need to take. Here's what's actually happening behind the headlines. Social media may be flooded with posts promising automatic deposits and nationwide relief payments, but the reality is much more complicated than it appears. Eligibility depends on factors like your income, filing status, and the specific benefits you receive. Some retirees will get the payment automatically, while others must act before a quickly approaching deadline. And missing that deadline doesn't just cause a delay, it could mean losing the $2,000 altogether. The government isn't sending out mass notifications, and your bank won't call to tell you about this. That's why understanding the real facts, not the rumors, matters more than ever right now. Let me be completely transparent with you right from the start. There's a lot of noise out there about Trump's $2,000 relief plan, and I understand why so many of you are confused, frustrated, or even skeptical. You've probably seen dozens of videos, read countless articles, and maybe even received forwarded messages from friends and family claiming that money is about to hit your account. Some of these sources make it sound like everyone gets the payment automatically, while others suggest you need to jump through hoops just to be considered. The reality sits somewhere in between, and that's exactly what we're going to unpack together today, step by step, without any confusing jargon or misleading information. First, let me address the elephant in the room. Is this payment actually real, or is it another one of those internet rumors that spreads like wildfire and leaves people disappointed? The answer is yes. There is legitimate government relief being distributed, but the details have been twisted and exaggerated as they've spread across social media platforms. What started as a specific relief initiative has morphed into all kinds of wild claims about universal payments, automatic deposits for everyone on Social Security, and other variations that simply aren't accurate. This is why so many seniors feel lost in the shuffle, not knowing whether to trust what they're hearing or dismiss it entirely as another scam. The truth is that relief payments are being issued, but they're targeted towards specific groups of Americans who meet very particular criteria. This isn't a universal payout being sent to everyone on Social Security, nor is it an automatic deposit that happens without any effort. The government designed this relief program with clear income limits, benefit conditions, and application steps that decide who qualifies and who doesn't. Understanding these requirements is absolutely essential because missing even one small detail could be the difference between receiving your payment on schedule or missing out entirely. So let's break down exactly who qualifies for this relief payment. It's mainly intended for individuals and couples with incomes below certain thresholds who are already receiving particular types of federal assistance. If you currently get Social Security retirement benefits, Social Security disability insurance, or supplemental security income, you're potentially eligible. But that alone doesn't automatically secure your payment. Your income from the most recent tax year plays a crucial role in determining eligibility. For single filers, the income threshold sits at a level that phases out the payment as your earnings increase. For married couples filing jointly, that threshold is higher, but it still exists and still matters tremendously. Now, here's where things get a bit more complicated, and this is information that many sources simply are not explaining clearly. The relief payment isn't just based on your Social Security income alone. The government looks at your adjusted gross income from your most recent tax return, which includes not just your Social Security benefits, but also any other income sources you might have. This may include income from pensions, investments, rental properties, part-time jobs, or withdrawals from retirement accounts. All of these sources are combined to calculate your total adjusted gross income. That final figure determines whether you qualify for the full payment, a partial amount, or if you are ineligible altogether. Let me give you a real-world example to make this clearer. Imagine you're a single retiree receiving $1,500 per month in Social Security benefits. That comes out to $18,000 annually from Social Security alone. Now, let's say you also receive a small pension of $500 monthly, which adds another $6,000 to your annual income. Additionally, you might have some modest investment income from a savings account or some CDs, maybe another $2,000 per year. When you add all of this together, your adjusted gross income is $26,000. This total is what the government uses to determine your eligibility, not just the Social Security portion. This is a critical distinction that trips up many people who assume only their Social Security income matters. The income thresholds change depending on your filing status. Single individuals have one threshold, married couples filing jointly have another, and there are even different considerations for those who file as head of household. These income thresholds aren't random or made up. They're calculated using federal poverty guidelines, cost of living adjustments, and policy decisions about who needs the most financial support right now. The government has identified that individuals below specific income levels are experiencing the greatest economic strain, which is why they're being prioritized for this round of relief payments. But here's something that's causing enormous confusion, and I want to clear this up immediately. The November 9th date that you're seeing everywhere isn't a universal deposit date for everyone who qualifies. Instead, it represents the beginning of the deposit schedule. Payments will be distributed in waves over several weeks, possibly even months, depending on various factors. The Social Security Administration and the IRS coordinate closely to issue these payments, following a set process that depends on how you usually receive your benefits, when you last filed your taxes, and whether your current banking details are up to date in their system. If you typically receive your Social Security benefits via direct deposit, and if the government already has your updated banking information from your most recent tax return or benefit enrollment, you're likely to receive your relief payment via direct deposit as well. This is the fastest method, and people in this category will see their payments arriving first, starting around that November 9th date. However, if you receive your Social Security benefits on a prepaid debit card, or if you still receive paper checks in the mail, your relief payment will follow that same method, which naturally takes longer to process and deliver. There's also a group that may experience extra delays, and knowing if you're in this category is key to setting realistic expectations. If you haven't filed a tax return for the most recent year, the government may lack up-to-date information about your income, address, or banking details. This doesn't automatically rule you out from receiving the payment, but it does mean you could need to take additional steps to claim your relief funds. The IRS has set up specific procedures for people who don't normally file taxes because their income falls below the filing threshold. These individuals often rely entirely on Social Security, or SSI, and haven't filed a return in years. For this group, there may be a simple online portal or paper form that needs to be completed to provide the government with necessary information. Now let's talk about something that's causing a lot of anxiety and confusion: scams. Whenever the government announces any kind of payment program, scammers come out of the woodwork trying to take advantage of people's confusion and eagerness to receive their money. You need to understand that the government will never call you asking for personal information to process your relief payment. They will never send you an email with a link asking you to verify your Social Security number or banking details. They will never request any kind of processing fee or advance payment to release your relief funds. Any communication that asks for these things is absolutely 100% a scam, and you should report it immediately. The legitimate process works like this. If you qualify based on the government's records, your payment will be processed automatically. Or you'll receive official correspondence through the mail from the IRS or Social Security Administration explaining what steps you need to take. This official correspondence will never ask you to click links in emails or provide sensitive information over the phone. It will direct you to official government websites that you can verify independently by typing the address directly into your browser rather than clicking any links. Let's tackle the question of checking your eligibility online. The short answer is yes, but only if you use the correct resources. The IRS offers tools on its official website to verify your eligibility for relief programs and track the status of payments. Likewise, the Social Security Administration provides online account access where you can review your benefits and see any payments that may be pending. These are the only reliable sources for checking your status. Do not trust third-party websites that claim they can check your eligibility faster or easier. Many of these sites are collecting your personal information for identity theft or marketing purposes. Another crucial factor that's often overlooked is how recent changes in your life can impact your payment. Perhaps you got married or divorced over the past year, moved to a new address, switched banks, or began receiving a type of income not reflected on your last tax return. Any of these changes can affect your eligibility or lead to delays in receiving your relief funds. If any major life changes have occurred, it's worth taking a few minutes to update your information with both the IRS and the Social Security Administration. This simple step can prevent weeks or months of delays and frustration. I also want to cover what to do if your payment doesn't arrive when expected. First, don't panic. Processing payments for millions of Americans takes time, so delays are fairly common. That said, if several weeks go by past the expected date, there are specific steps you can take to follow up and ensure you receive your funds. The IRS has a dedicated phone line for payment inquiries, though wait times can be extremely long during peak periods. An alternative is to check your online account on the IRS website, which often provides more immediate information about your payment status. If you discover there's an actual problem rather than just a delay, such as the payment being sent to an old address or a closed bank account, you can initiate a payment trace to locate your funds and have them reissued. Another common concern is taxes, specifically whether this relief payment will count as taxable income. In most cases, federal relief payments like this are not considered taxable. They're designed as tax credits or rebates, meaning they won't raise your tax bill for the following year. However, tax laws can be complex, and everyone's situation is unique. So if you have concerns about how this payment might affect your specific tax situation, it's worth consulting with a tax professional who understands your complete financial picture. Now, I want to address something that might seem obvious but actually trips up a lot of people. If you're married, the question of how much you'll receive depends on whether you file taxes jointly or separately. Married couples filing jointly may qualify for a higher payment amount, but remember your combined income must still fall below the threshold. Some couples actually benefit from filing separately if one spouse has significantly higher income that would push their combined total over the limit. This is one of those situations where the rules can work differently depending on your specific circumstances, and there's no one-size-fits-all answer for those of you who are helping elderly parents or relatives navigate this process. Thank you for taking the time to research this information. Many seniors find the complexity of these programs overwhelming, especially when they're bombarded with conflicting information from different sources. Your patience and assistance in helping them verify their eligibility, update their information if needed, and watch for their payment can make a tremendous difference. Also, make sure to stay alert for scams. Scammers frequently target seniors pretending to assist with payments while actually trying to steal personal information. Here's the bottom line. If you meet the income and benefit requirements, your payment is on the way. It may not hit your account exactly on November 9th, and it might not be fully automatic depending on your situation, but the money is real and it is being distributed. What you need to do now is make sure the government has your current information, watch for official correspondence, ignore any suspicious messages or calls, and be patient as the processing system works through millions of payments. This isn't a situation where panicking or rushing helps anyone. Methodical, careful attention to the official information and protecting yourself from scams is the smartest approach you can take.